Welcome to Countats. In this lesson, we're going to be looking at the sales journal, but we're going to look at an example where we have to take VAT into account. In our previous lesson, we looked at the sales journal, but in the example, we ignored VAT. So here we take VAT into account. So I hope you checked out our first lesson, which will greatly simplify this one here. If you do not know what the sales journal is, you'll find it in the link in the description below. So what do we record in the sales journal? What is the sales journal? Well, this is a journal used to record goods, which is inventory, stock, or merchandise that are sold on credit or on account. That's very important. It's only for goods that are sold on credit or on account. So when they say they were sold on credit or on account, it means that the person who bought them from you did not pay you at that point in time, but would pay you at a later point. So those are your debtors. So you'd record them in the sales journal. And it's very important that it's for goods, which are either inventory, stock, or merchandise, which are the same thing. Cash sales of goods or a sale of any other item such as fixed assets is not recorded in the sales journal. So when you make a sale on cash, you would not record it in the sales journal. That's recorded in the cash receipts journal. And you'll find all our other lessons on journals in the description below as well. And if you sell any other items such as fixed assets, even if it's on credit, you do not record it in the sales journal. We are only recording goods in the sales journal as mentioned. So what is the format for the sales journal, especially when you have to take VAT into account? Well, here it is. We have our sales journal format. We begin by writing the name of the company, and we have put here Eldo's Flowers. And then we write the name of the journal, which is the sales journal, and then you write the period for which the sales journal is prepared. For example, if you're asked to prepare the sales journal for December 2021, you would write the December 2021 as we have done. And then you'd begin with your format. If you looked at our previous lesson on the sales journal where we did not take VAT into account, you'll find that it's very, very similar to this one. The only difference between that one where we did not take VAT into account and this one is the column where we now have VAT output. So we begin by putting the document number, and this one here, if you'd not given the document number in your transactions, you just follow a sequence like 001, 002 and so forth, or 01, 02, 03 for every transaction that you do. And then the day here is the day of the month for the transaction. So if the first transaction happens on the 1st and you sold goods on credit, you'd put the 01 for the 1st. And then here where we have debtor, this is the name of the debtor or the person to whom you are selling on credit. So sometimes it's written debtor or details here. And then the folio, this is a cross-reference code. And it is usually a number or a combination of numbers and letters. And it is mainly for connecting two different records. So this is showing you where else it is found in another record, or where it's taken to, or where it's coming from. So we're not going to worry much about this one here in completing the sales journal. And then VAT output, this is the VAT output that is associated with this particular sale. Now when you're computing the VAT output, here you are taking the sales amount multiplied by the VAT percentage divided by the 100% plus the VAT percentage. And you'll see right now as we go through the example, you'll understand it much better with the calculation. And then here we have sales. This is where you put the sales amount. Remember, when you have to put the sales amount, you put the sales amount without VAT. And then you have the cost of sales. This is how much it costed you to buy the inventory that you have just sold, or how much it costed you to produce the inventory that you have just sold. So it's all the costs associated with bringing this inventory into a position where you're able to sell it. And then debtors control is what the debtor owes you, how much you actually sold it to him for. So the debtors control does include VAT, the amount that you put there. So let's go into the example in looking at how you do these calculations that I've been talking about. Here's the example that we have. We are told that the information given below was extracted from the records of Eldo's Flowers. VAT is applicable at 15%. record them in the sales journal for December 2021. Inventory is sold at a markup of 60%. So I hope you checked out our previous lesson, which would have simplified this one greatly. But if you have not, I hope you go ahead and do that. But if you're just checking this one as well, you should be able to understand it. So what you see in red here is the date of the month. And remember, here we are in December 2021 that we're dealing with. And the first one says that we sold inventory for cash 7,000 Rand, receipt 001. Does this go into the sales journal? Well, the answer is no, because remember, as we mentioned in our very first slide, that cash sales of inventory is not recorded in the sales journal because it's not sold on credit. Remember, if it's a cash sale, we record it in the cash receipts journal. So if you sold inventory on cash, it does not go into your sales journal. So we're just going to highlight that one there in purple. So I'll highlight everything that doesn't go into the sales journal in purple, and everything that goes into the sales journal, once we've done it, I will highlight it in black. So let's highlight the first one in purple because it's a cash sale and not a credit sale. On the second day of the month, goods were sold to Triple on credit for 5,000 Rand. So you sold goods on credit for 5,000 Rand. Does this go into the sales journal? Yes, it does, because you sold goods on credit. Now we have to calculate what we put in our sales journal. As you can see, here is our format again. We'll have to put our document number, our day, our data, the name of the data, VAT output, we have to calculate that. The sales amount, we have to calculate. The cost of sales amount, we have to calculate. And we have to put the data's control. But let's put the document number, which is 01, because we're starting with the first transaction, and that's why we're not given the document number. So we're just going to put it as 01. And then it's day 2, as you saw, and as you can see here, it's day 2. And what is the name of the data? The name of the data is Triple, as you can see here. So let's go ahead and put the name of the data, Triple. Now we have to calculate our amount. So let's go back, and we can see that we sold the goods for 5,000 Rand. So the first thing that we're going to calculate is our VAT output. How do you calculate your VAT output? Well, you take the amount for which you sold the inventory for, and you multiply that by the VAT percentage, and we're told that VAT is applicable at 15%, and you divide it by 115. Why 115? Because 100% is the amount without the VAT, but when you add the VAT, it's 115%. So this is how it looks. 5,000 Rand times 15 divided by 115 gives you an amount of 652 Rand 17 cents. That is the amount for the VAT. Now let's calculate the amount for the sales. We're going to take the same 5,000 Rand multiplied by 100 divided by 115. Remember, this 5,000 Rand that we are charging the customer includes VAT, but sales must not include VAT. Your sales amount must not include VAT. So we take 5,000 Rand times 100 divided by 115, and it gives us 4,347 Rand 83 cents. So remember, when you are calculating your sales amount, you take 100% divided by the 100% plus the VAT percentage, which is 115%. Okay, that's very important. You have to take out the VAT because sales should not include VAT. And then the next thing that we're going to calculate is our cost of sales, because we have a cost of sales column. Now, your format might not have the cost of sales column, and if it doesn't, you can ignore that part where we calculate the cost of sales. But here we do, and we have to calculate it. How do you calculate your cost of sales? Well, you can see here, inventory is sold at a markup of 60%. That means that we bought the inventory for 100%, and then we added a markup of 60% as our profit. Okay, I hope it makes sense. We have done another lesson on margins and markups and explaining it, and also how to calculate them on different scenarios. You'll find it in the link in the description below. But how do we do this? You take the sales amount, which is 4,347 Rand 83 cents, which you have just calculated, and then you multiply that by 100, and then you divide it by 160. Remember, the 100% is how much you bought it for, and the 160 is the sales amount, how much we are charging to a customer before putting on VAT, and you get an amount of 2,717 Rand 39 cents. I hope it's making sense. When you're calculating your cost of sales, you have to take the sales amount excluding VAT, which we have just calculated. The mistake that students usually make is by taking the 5,000 Rand, which is the amount that you're charging the customer. But remember, the 5,000 Rand includes VAT, and it includes the markup as well. So firstly, we calculate the sales amount, and then we calculate the cost of sales from the sales amount. I hope it's made sense. Now let's go and put in these amounts: the VAT 652 rand 17 cents, and the sales all the way to debtors control. What you'll notice here is the debtors control amount is 5,000 rand. If you add your sales amount plus your VAT output amount, it should give you the 5,000 rand. So you can always add them together to just make sure you've done everything correctly. But the debtors control amount is how much the debtor owes you. Remember, the debtor owes you inclusive of VAT, because they pay you including VAT, and then you will pay that VAT to the revenue authority. So I hope it has made sense with the first one. It will get easier as we go along. Let's do the next one. Now let's highlight this one here as we have just completed it. I'll highlight it in black because it goes into the sales journal. On the 3rd, we bought inventory from Ego Capital by check 2,500 rand, check 02. Now it should be easy for us to say it does not go into the sales journal because we were buying inventory, we were not selling inventory on credit. So let's highlight that one in purple because it does not go into the sales journal. On the 8th, we sold more goods to Triple for 2,500 rand on account. What I'd encourage you to now do here is to pause the video, attempt to complete the rest of the questions on your own, and once you're done, you can continue with this lesson and see how you have done. This will help you gauge how you understand this particular journal and how to calculate all the calculations we did in our previous transaction. So go ahead and pause the video and attempt the questions on your own. It will greatly help you than just watching it. Okay, I hope you've attempted the question on your own. Now let's continue and see how you did. On the 8th, we sold more goods to Triple for 2,500 rand on account. So if we sold more goods on account, that goes into the sales journal. So we have to calculate the VAT output, the sales amount, and the cost of sales amount. The debtors control amount is the 2,500 rand because that's how much we sold it to him for. And the 2,500 rand includes the VAT and includes the markup. So let's calculate the VAT output. How do we go about doing that? Well, I hope you attempted the question and you took the 2,500 times 15 divided by 115. Because 15% is the VAT and the 115 is the 100% plus the 15% VAT, and it gives us VAT of 326 rand and 9 cents. Okay, let's now do the sales. The sales, you take the exact same amount of 2,500 times 100 divided by 115, and it gives you 2,173 rand 91 cents. Now we can calculate our cost of sales because we have the sales amount excluding VAT. We take the 2,173 rand 91 cents, which is the sales amount excluding VAT, and we multiply that by 100 divided by 160, and it gives us an amount of 1,358 rand 70 cents. I hope it's getting easier and you can see how we go about doing this one here. The reason we are using 100% for cost of sales is because that's how much we bought it for, and we're dividing it by 160 because the sales amount is including the 60% markup. Okay, now that we have our amounts, let's go ahead and put them into our sales journal. You can see here that our date is 08, so we're going to put 08 and put Triple, so we'll put document number as 02 following our sequence, and it's day 08, and we put Triple as you see here. It's the same data, and then we put our amounts for VAT output that we have just calculated, for sales, for cost of sales, and for debtors control, which is 2,500. Again, you can check if you did all your calculations correctly. You take your VAT output amount plus your sales amount. It should give you 2,500 rand. Okay, I hope that was easy enough. Let's continue. Let's highlight that one because we've just completed it. So I'll highlight it in black because it goes into our sales journal. On the 9th, we bought inventory on credit from Shiligo 1,000 rand. I hope by now you know that does not go into the sales journal because we're not selling on credit. So let's highlight that one in purple. And then on the 10th, we sold inventory on credit to F Antioch 3,000 rand. That does go into our sales journal because we're selling inventory and we're selling it on credit. So let's calculate our VAT output, our sales amount, and our cost of sales. Our VAT output is the 3,000 rand times 15 divided by 115. It gives us 391 rand 30 cents. Our sales amount is the 3,000 rand times 100 divided by 115, and it gives us 2,608 rand 70 cents. And our cost of sales amount is the sales amount of 2,608 rand 70 cents times 100 divided by 160 rand, and it gives us an amount of 1,630 rand 43 cents. I hope that was simple enough as well. So let's go ahead and put our details in. You can see that our date is day 10, so we'll put that as our day, and our document number is 03 obviously, and our data, as we go back here, it's F Antioch, and then we'll put in all these amounts that we have calculated. So we'll put F Antioch there, we'll put the VAT output, sales, cost of sales, and our data's control is of course 3,000 rand. Again, you can add VAT output plus sales to see if you got that correctly or if you calculated it correctly. Let's go ahead and highlight that one as we have just completed it. And then on the 14th, we sold inventory for cash as per receipt 013 12,000 rand. So what did you do here? You sold inventory and you sold it for cash. Now, does this go into our sales journal? Well, if you answered no, you'd be correct. And the reason why it does not go into our sales journal is because it was sold for cash and not on credit. Sales journal records only what we sold on credit. So let's highlight that one in purple, as it does not go into our sales journal. On the 18th, we sold goods to M Titan on account. The goods were bought for 8,000 rand excluding VAT. Very important to pay attention to the details we are given here. Firstly, you sold goods to M Titan on account, so we know it goes into our sales journal because we sold it on account or on credit. And then the goods were bought for 8,000 rand excluding VAT. What is that amount? That 8,000 rand is the cost of sales amount. So this time around, we are given the cost of sales amount. We are given the amount for which we bought the inventory. That's very important because that means we don't have to calculate our cost of sales, but we have to calculate our sales amount, our VAT output amount, and our debtors control amount. So let's go ahead and do that. The first thing we're going to calculate is our sales amount. Since we have our cost of sales amount, and if you have been wondering how do you work forward to get your sales amount, you take the 8,000 rand times 160 divided by 100, and it gives you 12,800 rand. Remember, your sales amount has to be higher than your cost of sales amount. So why do you do this? Well, because you know that the cost of sales is the 100%, and if you add a markup of 60%, it's 160%. So you want the 160% of 8,000 rand. So it's 8,000 times 160 divided by 100. Another way you could have done it is by taking 8,000 times 1.6, which is the same as 160 divided by 100, and gives you 12,800. Now that we have the sales amount, we can calculate the VAT output amount, which is the 12,800 times 15 divided by 100. Very important because we have the sales amount, and the sales amount does not include VAT. So we multiply it by 100 and not 115 because we're not working backwards from debtors control. Get an amount of 1,920, and we can now get our debtors control. How do you do that? Well, you can take 12,800 rand plus 1,920 rand, and it gives you 14,720 rand. Now we have all the amounts that we need, so we can put them into our sales journal. And why did we do it differently from the other transactions? Is because we're told how much the goods were bought for, or how much the company bought the goods for, not how much it was sold to the customer for. Okay, so if you're given how much it was bought for, that is your cost of sales. Now you have to get your sales, your VAT, and your debtors control. So our day is day 18, and the name of the data is M Titan, so we'll put the document number is 04 following the sequence, and the day is day 18, and as you can see is obviously M Titan, so we'll put that as a data. And then we need to put in our VAT output amount, our sales, cost of sales, and debtors amount. So here we have all the amounts that we need, from our VAT, which is the 1,920, to our sales 12,800, our cost of sales is 8,000, and our debtors control amount is 14,720. So let's go ahead and do that. Our VAT output is 1,920, our sales is 12,800, our cost of sales is the 8,000 rand, and our debtors control is the 14,720 rand. Now, if you want to do a sanity check again, it's just adding your VAT output plus your sales. It will give you 14,720 rand. That was a bit different from the other transactions, so we've just completed it. Let's just highlight that one in black as we have just completed it. On the 23rd, we bought equipment from Chilltree by check, 7,000 Rand. That does not go into our sales journal because we were not selling goods on credit, so we'll highlight that in purple. On the 30th, M Titan made a full settlement of account after deducting 10% discount. This does not go into our sales journal because we're not selling on credit. A debtor was paying us, so this goes into a cash receipts journal. So we'll highlight this one in purple as well. And you can see we have just completed all the transactions that we needed to do. All we now need to do is to go back and just put the totals for VAT output, sales, cost of sales, and debtors control. So let's do that, and there we have it, and we have just completed our sales journal. Just to make sure you've added everything correctly, if you add the total for your VAT output and your sales, it should give you your debtors control amount of 25,220. Just to make sure you've added it correctly and you've done everything correctly. I hope it has made sense. I hope you've gained value from this lesson, and if you have, please consider subscribing to our channel, like this video, and share it to those you think it might help. Till next time, cheers.